China just rewrote the rules of global trade. They froze 10 billion in U.S. goods in Shanghai. But it's not about inspections. It's a strike at America's heart. Shanghai Port is the pulsating heart of global commerce, a colossus handling 17% of China's total trade and 47 million containers annually. On April 19, 2025, it became the epicenter of a trade war earthquake. China's official explanation for delaying 10 billion in U.S.-bound cargo? Routine environmental and safety inspections. But don't be fooled, this was no paperwork glitch. Logistics experts and shipping veterans smelled burning rubber. This was a deliberate, tactical strike, a masterclass in economic warfare disguised as bureaucracy. The cargo, including semiconductors, electric vehicle, EV, parts, and critical medical supplies, is now stranded, choking the supply lines that power America's economy. Why this move, and why now? The U.S. had been tightening the screws with escalating tariffs on Chinese imports, aiming to curb China's economic influence. China's response was surgical, sidestepping formal counter-tariffs that could trigger World Trade Organization (WTO) penalties. Instead, it unleashed soft strikes, administrative delays that paralyze without breaking international rules. Within 1 week, supply chain backlogs surged by 20%, stranding goods and sending ripples through global markets. Picture a massive highway pileup where every stalled truck carries the chips for your smartphone, the batteries for your Tesla, or the syringes for your local hospital. This blockade isn't just about Shanghai's docks, it's a bold statement. China wields its port infrastructure as a geopolitical weapon, flexing control over the lifeblood of global trade. Shanghai's dominance, moving nearly 500 million tons of cargo, annually gives China unmatched leverage. The U.S., tethered to Chinese manufacturing for 70% of EV battery components and 80% of rare earth minerals, is caught in a vulnerable spot. This isn't a one-off disruption. It's a calculated warning shot in a war where supply chains are the battlefield. The 2018 trade skirmishes, which targeted U.S. soybeans, pale in comparison. This time, China's aim is precise, striking America's tech and healthcare sectors, the drivetrain of its economy, with devastating precision. The broader implications are chilling. By weaponizing its ports, China is testing the resilience of global trade networks. Every delayed container is a reminder that economic interdependence is a double-edged sword, offering prosperity but also fragility. As the U.S. grapples with this chokehold, the world watches. Can America break free, or will China's grip tighten? China's blockade just shattered global supply chains. Your iPhone could be delayed for months. But it's not just tech, your car and hospital are next. The Shanghai blockade is like a boulder crashing into a still pond, with ripples tearing through every facet of American life. A 10 billion shipping jam isn't just a statistic, it's a wrecking ball demolishing supply chains, inflating prices, and threatening livelihoods. Let's unpack the cascading fallout. Start with semiconductor shortages, the lifeblood of modern electronics. These chips power everything from smartphones to fighter jets. With China delaying critical shipments, insiders warn of 2-month delays for iPhone 17 pre-orders, while laptop inventories could dry up by July 2025. This isn't just about missing the latest gadget, it's about factories idling, workers furloughed, and entire industries stalling. The tech sector, already battered by years of supply chain woes, is now on life support. Next, EV battery shortages are slamming the auto industry. 70% of EV components originate in China, and automakers like Tesla, Ford, and GM are bracing for impact. Small fleet operators, relying on electric vans for deliveries, face delivery delays stretching into 2026. Imagine a small business owner watching their livelihood grind to a halt because the batteries for their fleet are stuck in Shanghai. This isn't hypothetical, it's a crisis unfolding in real time, with ripple effects hitting consumers who dream of affordable electric vehicles. The most alarming fallout? Medical supply shortages. Nearly 60% of U.S. syringes and 30% of diagnostic kits are sourced from China. As flu season approaches, hospitals are sounding alarms over dwindling stockpiles. This isn't a minor inconvenience, it's a public health crisis that could cost lives. A single delayed shipment of syringes could mean the difference between a hospital functioning or turning patients away. Then there's the economic sting. The National Retail Federation projects 5–10% price hikes across electronics, auto parts, and appliances by mid-2025. That 500 smartphone? Now, 550. That 20 commuter car? Flirting with 22 0. Add demurrage fees of $100–200 per day for each stranded container, and costs are snowballing like a runaway freight train. These price spikes aren't abstract. They'll hit every American's wallet, from tech enthusiasts to families budgeting for a new car. This chaos lays bare a brutal reality. America's dependence on Chinese manufacturing is a strategic weakness, ruthlessly exploited in this trade war. Every delayed container is a stark reminder that global supply chains are not neutral highways, they're choke points in a geopolitical chess game. As prices climb and shortages deepen, the U.S. faces a reckoning. Can it rebuild its supply chains before the damage becomes irreversible? America just escalated the trade war to new heights. They hit Chinese ships with 3.5 million fees. But it's not a win, it's a gamble crashing U.S. ports. As Shanghai's blockade sent shockwaves, the U.S. floored the accelerator in retaliation. On October 14, 2025, the U.S. imposed port fees of 1M, 3.5M on Chinese-built vessels docking at American ports. This isn't a tariff, it's a nuclear option, designed to cripple China's maritime dominance. But it's a high-risk gamble, like flooring a race car on a rain-slicked track. Gene Saraca from the Port of Los Angeles, which sustains over 1 million jobs, warned that a 10% drop in cargo could trigger mass layoffs. Already, container traffic from China has skidded 25%, forcing shipping lines to scramble for South Korean or Japanese vessels. China's maritime titan, COSCO Group, is caught in the crosshairs. Its fleet, a linchpin of U.S. China trade lanes, is struggling to reroute. This isn't just a corporate headache, it's a seismic disruption. Retail giants like Walmart and Target are bracing for stock shortages, with empty shelves looming as holiday seasons approach. Importers are hoarding goods in bonded warehouses, while trucking companies watch freight volumes fluctuate like a tachometer at redline. This tit-for-tat is no mere skirmish, it's a supply chain bloodbath, with workers, consumers, and businesses caught in the wreckage. The U.S. fees aim to hit China where it hurts, but they're a double-edged sword. Higher shipping costs will inflate prices further, while reduced competition in shipping could strangle smaller players. Ports, already stretched thin, face bottlenecks that ripple across the economy. Meanwhile, China's response is calculated. By leveraging its port dominance, it's forcing the U.S. to fight on multiple fronts. This isn't a quick race, it's a grueling endurance test, with both nations digging in for a prolonged war of attrition. The broader stakes are staggering. Trade wars don't just disrupt markets, they reshape societies. Layoffs at ports could devastate communities, while stock shortages could erode consumer confidence. As both sides escalate, the global economy teeters on the edge, caught in a cycle of retaliation that shows no signs of slowing. America just launched a plan to break China's grip. They're spending billions on new factories. But it's not enough. The U.S. is years behind. The U.S. isn't standing still. Through the CHIPS Act and Inflation Reduction Act, it's funneling billions into domestic semiconductor and EV battery production, aiming to break China's stranglehold. This is a moonshot effort to revive American manufacturing, a bid to reclaim economic sovereignty. But here's the harsh reality. Most new plants won't be operational until 2027 or later. In the interim, America's vulnerabilities are exposed like an open wound. China controls 70% of global EV battery output and 80% of rare earth minerals, the critical ingredients for electronics, EVs, and green tech. Rerouting supply chains through Japan, South Korea, or Vietnam offers a partial lifeline, but it's no silver bullet. These routes are costly and limited, unable to match China's scale. Air freight bookings from China are down 30%, slashing cargo volumes at U.S. hubs like Chicago, Dallas, and Atlanta. Meanwhile, shipping costs from Vietnam and Cambodia have spiked 15%, adding pressure to already strained supply chains. Washington is prepping additional tariffs if trade talks collapse, but experts warn that a full decoupling from China could shave 2% off U.S. GDP hit worth hundreds of billions, equivalent to wiping out entire industries. China, meanwhile, is playing a long game. It's deepening trade ties with Europe and Asia, building alliances that outmaneuver the U.S. Picture a chess grandmaster positioning pieces while the U.S. scrambles to rebuild its board. The U.S.'s supply chain resilience is facing its toughest test yet, a crucible that will determine whether it can endure in a world where trade is a weapon. The CHIPS Act and Inflation Reduction Act are bold, but they're a marathon, not a sprint. Every month of delay strengthens China's hand, leaving the U.S. racing against time. This race isn't just about economics, it's about national security and global influence. A nation that can't produce its own chips or batteries is a nation at risk, vulnerable to the whims of its rivals. As the U.S. pours resources into this fight, the world watches. Can it close the gap? Or will China's industrial dominance prove insurmountable? This trade war just redefined global power. It could spark conflicts beyond economics. But it's not just trade, it's a fight for the world's future. Step back, and the Shanghai blockade, U.S. port fees, and tariff follies reveal a profound truth. This trade war is a battle for global supremacy. Supply chains aren't just logistics, they're battlegrounds where economic might meets military strategy. Both Republican and Democratic leaders now treat trade as a national security tool, a shift that marks a new era in global politics. The Ships for America Act, aimed at rebuilding U.S. shipbuilding, ties economic resilience to military strength. But the gap is stark. China builds over 700 ships annually. The U.S., fewer than 5. This reliance on Chinese industrial output is a gaping vulnerability. From rare earths to medical supplies, today's disruptions could be weaponized in future conflicts. COSCO's struggle to reroute its fleet illustrates how targeted economic pressure can cripple even state-backed giants. But there's a cost. Soaring freight costs, reduced competition, and fragile supply chains threaten global stability. The 2025 Shanghai shutdown could mark the start of systemic decoupling, a tectonic shift that redefines global trade. The stakes extend beyond economics. Tensions around Taiwan and the South China Sea loom as potential flashpoints. If trade disruptions escalate, they could ignite geopolitical crises, reshaping alliances and power dynamics. Supply chains, once seen as neutral highways, are now strategic battlegrounds in a contest for influence. China's port dominance and industrial might give it a head start, while the U.S. scrambles to rebuild its arsenal. This is a high-stakes chess game, with the world as the board. Every move, every tariff, every blockade carries the weight of history. The U.S. and China aren't just fighting for market share, they're vying for the future. As disruptions mount, the question isn't just who wins this round, it's whether the global order can withstand the fallout. Qualcomm just sounded the alarm on the trade war's toll. They slashed their revenue forecast by millions. But it's not just Qualcomm. Every tech giant is feeling the heat. The U.S. China trade war is no longer an abstract geopolitical spat, it's hitting corporate America where it hurts most. The bottom line. Qualcomm, a leading producer of smartphone chips, issued a stark warning on April 30, 2025, forecasting third-quarter revenue between $9.5 billion and $10.3 billion, falling short of Wall Street's expectations of $10.07 billion. This tepid outlook sent Qualcomm shares tumbling 6% in after-hours trading, a clear signal that the trade war's ripple effects are battering even the titans of tech. The culprit? President Donald Trump's aggressive tariff policies, which are sowing chaos in global markets and dampening demand for Qualcomm's chips, particularly in the critical Chinese market. Qualcomm's struggles are a microcosm of the broader tech sector's woes. China's smartphone market, the world's largest, saw a 3.1% drop in shipments in the first quarter of 2025, according to IDC data, as trade tensions and economic uncertainty curbed consumer spending. Qualcomm, heavily reliant on Android phone manufacturers like Samsung and Xiaomi, faces a double blow: reduced demand in China and supply chain disruptions from the Shanghai port blockade. The company's chips, integral to everything from 5G connectivity to AI-enabled devices, are now caught in the crossfire of a trade war that shows no signs of cooling. CEO Cristiano Amon acknowledged the headwinds, noting that macroeconomic uncertainty and potential tariff impacts are clouding the company's outlook. But Qualcomm isn't alone. The Philadelphia SE Semiconductor Index has been whipsawed by tariff-driven volatility, with investors bracing for further fallout as tariffs threaten to inflate costs and choke supply chains. Companies like Nvidia, TSMC, and Intel are also grappling with the uncertainty, as the U.S.'s port fees on Chinese vessels and China's retaliatory delays disrupt the flow of critical components. This isn't just a corporate earnings story, it's a wake-up call for the tech industry, which has long relied on globalized supply chains now fracturing under geopolitical strain. As tariffs pile on, higher production costs and delayed shipments could push tech giants to pass price increases onto consumers, further fueling the 5–10% price hikes projected by the National Retail Federation. The stakes are immense. Tech accounts for nearly 30% of the S&P 500's market value, and any sustained downturn could drag down broader markets already reeling from Trump's policies. Qualcomm's cautious forecast is a harbinger of tougher times ahead, as the trade war threatens to erode the profitability of an industry that powers modern life. This isn't just about chipsets, about the fragility of a tech-driven economy caught in a geopolitical storm. Trump's tariffs just rocked global markets. They wiped trillions off U.S. stocks in 100 days. But it's not over. The next 100 days could be worse. The first 100 days of Trump's second term, ending April 30, 2025, were a roller coaster for global markets, with tariff-fueled chaos wiping trillions of dollars off U.S. asset prices. The S&P 500 and Dow suffered their worst first 100 days under any president since Nixon's second term in 1973, while the dollar index plummeted nearly 10% as investors fled U.S. assets. The Shanghai port blockade and U.S. port fees on Chinese vessels were just the opening salvos in a trade war that has left markets dazed and confused, grappling with a toxic mix of economic contraction and policy uncertainty. The numbers tell a grim story. U.S. GDP shrank in the first quarter of 2025, the first contraction in 3 years, driven by a record-high $153 billion trade deficit as companies front-loaded imports to dodge tariffs. Wall Street took a beating, with the S&P 500 closing below 5,000 points for the first time in a year and the Nasdaq losing 25% of its value since December 2024. Keith Lerner of Truist warned that markets are underpricing downside risk, estimating a 10% YoY potential drop for the S&P 500 against a mere 5% upside. The fear is palpable. Tariffs are not just disrupting trade, they're pushing the U.S. toward a Trumpcession, a term gaining traction as economic indicators flash red. Globally, the fallout is just as severe. European markets slid in lockstep with Wall Street, while Japan's factory activity contracted due to U.S. tariff worries. China, meanwhile, is digging in for a war of attrition, leveraging its industrial might to outlast the U.S. The global economy is creaking, with 12-month forward earnings forecasts for the S&P 500 hitting 280 per share but facing skepticism as tariffs threaten profit margins. Investors are jittery, with Federal Reserve rate cut expectations rising to 100 basis points in 2025 to counter tariff-driven inflation and recession fears. The next 100 days could be even rockier. While Trump has dialed back some extreme policies, the uncertainty of his tariff agenda coupled with China's retaliatory moves keeps markets on edge. This isn't just a market correction. It's a tectonic shift in global finance, with the U.S.'s economic dominance at stake. As supply chains fracture and trade talks falter, the world braces for a new era of volatility, where every tariff is a grenade lobbed into the heart of global commerce. This trade war just changed the world forever. It's pushing us into an economic Cold War. But it's not just economics that's your future at stake. The $10 billion cargo blockade, retaliatory port fees, and escalating tariffs are not temporary roadblocks. They're the opening salvos in a new economic Cold War. America's push to revive manufacturing is bold but fraught, promising higher prices, job shifts, and fierce competition. China, like a precision-engineered machine, counters with speed and scale, leveraging its industrial dominance to outmaneuver the U.S. The question isn't just whether America can rebuild its supply chain sets, whether it can endure a world where trade routes are battlegrounds. This crisis demands a global reckoning. Can the U.S. close the industrial gap in time? Will China's grip reshape the world order? Is decoupling a path to resilience or a road to ruin? Share your thoughts in the comments. Your perspective shapes this critical debate. Subscribe to Global Gear Shift and hit the bell for more unflinching analysis. Until next time, stay informed, stay vigilant, and brace for a turbulent road ahead. You've seen the playbook behind the headlines now. Stay ahead of the game. Subscribe to decode the moves shaping tomorrow's world. from trade wars to tech revolutions. Join the 1% who don't just watch the news but understand it. Hit that button, share this video, and follow us for the stories others miss. The next shift is coming. Will you see it first? Let's unravel the future together, one silent victory at a time.